Hey everyone, welcome back to the Hashrate Happy Hour Podcast. This show is brought to you by Giga Energy, a leading electrical manufacturer focused on Bitcoin mining. And before we get into the intro today, I wanted to ask you guys for a huge favor. If you have not already subscribed to the show or given the show a rating and review, that would be hugely helpful for me, so if you could take just a second to go and do that, that would mean a lot. This Monday's release is the second episode in our brand new series that we are launching called the Energy in Bitcoin Mining Monthly News. We are going to have on industry thought leaders Collin Kelly, an account manager at Luxor's ASIC trading desk, Wolfie Zhao, the founder and head of research at the Miner Mag, and Eric Neal, the director of energy planning at Digital Power Optimization, which you'll hear DPO for short throughout the episode. This format is going to be rolled out once a month, on the last Monday of each month, where we'll be bringing you the hottest and most relevant news in the energy, Bitcoin mining, and infrastructure industries, with the hopes that you guys can start to identify trends and stay up to date on the latest. This month was absolutely packed with things that we had to discuss. Collin kicks us off with a walkthrough of the brand new Luxor Logistics division that they just rolled out, where they are now able to help everybody manage their miner fleet when getting it from point A to point B. We also get into the absolute tear that the miner market has been on, and Collin and Wolfie actually talk through how they're starting to see a noticeable shift in the network hash rate away from the pubcos. Eric and I then start to riff on the litany of things going on in the energy industry, things like the NuScale small modular reactor, and all of the renewable projects lately that have been getting canceled on the East Coast. Again, there was a ton that we went through on this episode, so I hope that you guys enjoy this brand new segment of the Hashrate Happy Hour Podcast, and please write in with topics, because next month we want to make sure that we're covering some things that you guys are interested in hearing about. This show is brought to you by Foreman, the leading miner management software, where you can also manage and automate your curtailment strategy all from one clean dashboard. Whether you have 3 miners or 30,000 miners and a robust, complicated curtailment strategy in a regulated power market, you can manage all of that leveraging Foreman. Guys, I honestly don't think I'm doing this software justice just by talking about it. You really need to go give this a try for yourselves, just to understand how easy it is to start and quickly find multiple miners all at once, configure them all at once, and then set up your automated prompts for ramp up and ramp down for the particular curtailment strategy that you have. Seriously, if I can do this, which I have, and I still use to this day, then all of you certainly can do this too. Go check them out and get started managing your miners like a pro today at foreman.mn. That's FOREMAN.MN, foreman.mn. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. Hey everybody, welcome back to the show. Like I said in the introduction, we are back for the November Energy and Bitcoin Mining Monthly News episode. And just to kind of reiterate and touch on, the goal for this monthly show is really for us to bring you guys some of the hottest news, trends, updates in the energy, Bitcoin mining, and infrastructure industries, so that you guys can start to identify trends and or maybe keep a pulse on the market. As always, I am here with Collin Kelly at Luxor, Wolfie Zhao at the Miner Mag, and Eric Neal at Digital Power Optimization, which you'll hear DPO for short throughout the duration of the episode. I just want to make sure that you guys don't sit there the whole episode and say, what is DPO? So, guys, Collin, Eric, Wolfie, morning, evening. It's good to see you guys.
Great to be here,
Thanks
Ben.
for having us.
Yeah, good morning.
I want to kind of, just before we get into some of the updates and topics for today, uh, Collin, I know I ran into you several times at the Texas Blockchain Council North American Blockchain Summit. It's a mouthful. The TBC NABS for short. Eric, were you there by chance? And Wolfie, were you?
No.
I was not.
No? Okay.
Looking forward to hearing about it.
Yeah. So, Collin, I'd be curious, how was that event for you?
It was incredible. I think the TBC organization did a fantastic job of organizing the event, and having it in the backyard right here in Texas was great for me. You know, short ride from Houston up there, and all the big players in the space came. So having two presidential candidates up on stage talking about Bitcoin, I don't think it gets any better than that. So I think it's a testament to how the space is evolving, and people are forced to pay attention to us now, and it feels good.
Yeah, truly hats off to Lee Bratcher. He's, supporter of the show and sponsor for the show. And they just did a bang up job. Crazy to look around. There's just presidential candidates walking around. It was a pretty sweet event. It's there's a lot of interesting things going on around the event too. I ended up at a core scientific facility tour, which was pretty spectacular. Collin, I think I saw you there for that too. I think I saw you like every day, multiple times.
I was busy, man. Yeah, we actually sponsored the buses to those tours and partnered with Corsi, and also did a tour to the 360 mining gas site out there as well. So I think both of them were a hit. All the buses were full. I think it was a great opportunity for people to get out there, see a real Bitcoin mine in person, and just kind of take in what it takes to build out these sites, because they are a marvel of engineering. I mean, that Corsi site was amazing. So yeah, I think it was a really great time for everyone.
Were there many like new faces, or what was the vibe? Was it, or is it like the usual suspects mostly?
Believe it or not, there was actually a bunch of new faces. So I think it was a great opportunity for people that maybe hadn't ever seen Bitcoin mining in person to get out there and check it out, what it takes to build out these sites, the power, the engineering, and just the manpower that goes behind it.
I think also at the conference though, Wolfie, I'm trying really hard to like pay extra attention to this going to these conferences. You ask a really good question. Was it all the same folks, or was it new folks? I feel I'm a little bit biased towards noticing, like the core scientific, Soluna, Argo was there, so I feel like I'm a little biased to seeing the same groups, but it did feel, especially that first day, that there was a pretty substantial wave of new entrants. Had a lot of good conversations with folks who were looking at kind of their first mining project of some sorts. So yeah, it's a good question though, Wolfie. A lot of the same big names there, but it's a good healthy mix of new faces, new blood. So guys, want to maybe kind of go from there and jump into maybe some of the industry, updates, topics. Collin, we started with you first last time. I don't know if you're, wanting to go first again, but if you want to maybe kind of kick this episode off with launching into some of the infrastructure updates and go into all that.
Absolutely, man. So Luxor had a big announcement yesterday. We kicked off our Luxor Freight Solutions. So what does that mean? We're now offering like door-to-door shipping and global delivery. And we really wanted to just roll it all up into a service that can get your miners from anywhere in the world to where they need to be. We can help with customs clearance and consultation, import and export solutions, freight insurance and advisory services, and even on-site equipment inspection and deployment. So we've done a couple of things to prepare for this. One is we expanded our Montana warehouse to be able to hold more capacity, so offering kind of on-demand storage and some other services there. So it's a big step forward for the Luxor team, and excited to help others in the industry. It's kind of like you don't have to procure your ASIC equipment from Luxor to use our shipping service. So it really opens up the door for other companies and brokers in the space that want a trusted counterparty, somebody they know that can handle the workload and get things done successfully. So that's kind of why we launched it. We've sold over $235 million of ASIC equipment and delivered those successfully all around the globe to 30 different countries. So really just ramping up our additional services. I think it's a great product for the space. So really excited about that. And that kind of segues into what else is happening at Luxor. So let's talk about ASICs and what we're seeing in the ASIC market. These last couple of months demand has absolutely just skyrocketed. And personally, for me, I think, we've been seeing ASIC prices downtrending for several months, and I feel that the bottom is in and ASIC prices are back on the uptrend. So,
all right.
Yeah, so some big things happening there. So Luxor's RFQ cleared 3,800 ASICs in October, which was about 128% increase in volume from September. And now here we are in November, still got about 10 days left in the month, and we've seen 3x those numbers, clearing over an exahash of machines just in the month of November. So that's about 10,000 rigs, which is just massive, massive numbers. So demand is really picking up, and vendors and OEM manufacturers have noticed this trend. So we are seeing price increases across the entire ASIC market on new and used machines. So, the hottest machine right now on the market, everybody's talking about it, is the K Pro. And what I'm finding is we are competing directly with Russia for ASICs. I was working a couple of deals where we had locked in supply. We're waiting on a bank wire to clear, and a Russian group came in and bought up like over 5,000 K Pros in the 24 hours previous, waiting on that bank wire to clear. So it's getting pretty cutthroat out there. ASIC supply is dwindling, now we're waiting on Bitmain to release the next big batches of K Pro and XP. So some interesting market dynamics playing out in the ASIC world.
So do you guys think?
Yeah, go ahead, Wolfie.
Yeah, I was just wondering. Like last month, I saw the public mining data, and there was a thing I noticed, which was that the public miners' market share was kind of like the total market share kind of declined in terms of like the total the total Bitcoin they mined compared to like a couple months ago. So like it was a slight decline, like maybe like 1-2%. But I was wondering, like maybe the hash rate over last month was coming from somewhere else.
Interesting.
So I tend to. It's a global effort. Let me start with that. However, there are some bigger players that are deploying hash and plugging in faster than everybody else. So I had the opportunity to go to Dubai and visit the Blockchain Life conference out there, and just walking around, getting to know people, visiting different booths. And one thing I noticed is, wow, there's a lot of Russian companies here, and they were offering a whole spectrum of services, one being hosting, two being ASIC brokering, and also some mining pool stuff. So I got to talking to those guys a little bit, and the power pricing that they're getting is just absolutely insane. They're offering retail hosting prices, for 1, 10, 100 machines starting at 5 cents, which is several cents cheaper than anything that we really have retail side here in the U.S. So I think, for me, it's just more validation that this is a global effort. It's happening all around the world. We see large deployments happening in Central and South America, Russia, the UAE. So that's where global hash rate is coming from.
Wow. Was it as far as like size of those orders, do you happen to know like average quantity per order? I know I'm getting super granular on you, but
I don't. I think that would be some really interesting data. What I can tell you is that the Chinese brokers are now keeping spot inventory available in Moscow. And, they wouldn't take that risk unless there's large market demand to take that up, because, as you know, ASIC pricing is volatile, so holding any kind of spot stock, you're exposed to the market. But they're taking the time and the effort to send it over to Russia and keep it there for quick deployments. So that to me is a major sign that these guys are just buying up his machines as fast as they can. I don't know how they're getting their infrastructure online so rapidly, but it seems to be happening at an exponential rate. I mean, I can tell you, walking around the conference, there were several Russian hosters offering, boasting sites of 20 megawatts online, expanding up to 100 megawatts in the next 3 months. So they have access to power. They're getting their infrastructure online, and they're buying ASICs as fast as possible.
Damn. I feel like I say this a little, tongue in cheek. This is kind of a joke, but I feel like everybody's got a 100 megawatt mining facility these days.
Yeah, it gives off 2021 vibes, right? Everybody's like, I'll take 10 megawatts. I'll take 100.
Yeah. No, wow, that's I appreciate that, Collin. That's I'm excited to hear that from what you're seeing in the numbers. Very much so a rush to the demand. Yeah, I'm also interested in the infrastructure of it all. I wonder if they were just building quietly, this last 12 months, and that's why they're able to slot machines so quick.
Yeah, that has to be the case in my opinion. And one more big thing to hit on while we're on the topic of the conference. So MicroBT came out and announced their M60 series at the Blockchain Life conference in Dubai. This included the M60, M60S, the immersion miners, so M66, M66S, and also their new Hydro line, M63 and M63S. So here we are, we're stepping into the era of sub 20 joules per T efficiency machines. Things are getting bigger, more efficient, and it's just no slowing down in sight.
How about Aradyne? I mean, they were pretty big presence at the conference too. Did you get a chance to talk with those folks? Or you guys?
Yeah. So we're actively talking with them and trying to get our hands on some testing units. So I think we'll have some more data on that in the future. But I'm hearing great things, and personally, I want USA Silicon to be a name in the race. I think we need it. I think it would be great for the mining space if we had some USA companies that were competing with the top dogs, MicroBT and Bitmain.
Yeah, I totally agree. So Wolfie, I'm not sure, if you wanted to kind of jump in next and talk through maybe what you're seeing from, just kind of the Bitcoin mining market from like a macro perspective, or Eric, if you wanted to jump in next, but Wolfie or Eric?
Yeah.
Well, I've got before we jump topics, I've got a couple of questions for Collin. Coming back to your first topic about Luxor's freight solutions, you had mentioned deployment on the tail end of that supply chain, and I'm curious how far Luxor goes in the deployment piece.
Sure. Really, so the most experience we have is really with just unboxing and helping rack machines. We don't really get too involved with the infrastructure side of things, but hey, if you want to order a bunch of miners, I can come help plug them in for you, is basically the service there. So, um, but we're always growing, expanding, and any way we can help out our customers, we find a way to do it.
Excellent. Thanks. Yeah, and I have a whole host of questions and curiosity about the volume of infrastructure being deployed in Russia and the genesis of that. I don't know if that's a result of Russian capital being cut off from, markets, and this, money has to be deployed somewhere, and they're picking it up, and maybe this is temporary in nature, or is this more of a strategic play to expand their presence in the Bitcoin ecosystem? I don't know. Do you have any additional insights that came out of Dubai as to why all this capital in Russia?
I think it's a combination of that. One being, there's a lot of wealthy people in Russia that may not be as confident in the ruble and Putin and everything that's happening over there. So they're looking for a flight to safety. And you can purchase machines with the ruble and get your Bitcoin out on the other side. So I think a lot of wealthy folks are looking at that as a way to diversify their wealth, which is what we've seen in China before the mining ban and these other places where you have a currency that might be struggling. So yeah, it's some interesting dynamics. I wish I had some more insight, but I kind of just I can only I can only take away what I saw at the conference. I don't have boots on the ground over there, so not sure on all the details, but yeah.
No, that's helpful context. I like the way you described it, a flight to safety, where this is viewed as stability. And I think that speaks volumes to what Bitcoin can do on a global scale.
Yeah, if you just saw the Phoenix group, they raised. I mean, they announced like they claim the IPO was like crazily oversubscribed, like 33 times, from like a stronger demand from the retail investors. I think their target was like about $370 million. So that definitely shows some interest there.
And that was Finex?
Yeah, Phoenix Group.
And they're out of the UAE, so I think it's more market validation for that region. I think there are some, I when I was in Dubai, I also got to visit Abu Dhabi, and it looks like most of the actual Bitcoin mining is happening in Abu Dhabi rather than Dubai. Dubai is more of like not traditional finance, sorry, like exchanges, DeFi, Web3 kind of stuff. Where the machines are actually getting plugged in is in Abu Dhabi. And I think there are still some significant engineering challenges to overcome there to deal with the heat. Even though they are kind of leaning towards hydro and immersion deployments, you're still dealing with, extremely high heats in the summertime. So I think they still have some kinks to work out on how to deal with that heat and survive the summer. So it'll be interesting to see how these larger companies like Phoenix, Zero Two, I know Marathon's over there with a couple of big sites. I think it'll be interesting to see the data that comes out throughout the summer of their hash rate, their uptime, because like I said, yeah, it just gets so freaking hot over there.
Hot and dusty.
That's right. which is ASIC killers, The heat, humidity, and dust are your biggest problems for an ASIC computer.
Absolutely. Yeah. So Wolfie, you mentioned that they oversubscribed by, and did you say 30%?
30. It just said 33 times. So.
Oh, that's crazy.
Yeah, that was some crazy news. But yeah. Well, I think that that does show some like strong interest for plugging in, like interest in general, like Bitcoin mining ecosystem, um, which is also reflected from the surge of hash rate over the past month. Like it was relatively moderate compared to like September, October, but still like it's kind of close to breaking through like 500 exahash level for the 7-day average. So I mean, on a broader level, like most of the public miners just released their Q3 numbers, right? So I think on a broader level, it's just like increases the cost of Bitcoin production for almost like everybody, unless you manage to like substantially increase your fleet efficiency and your power rate, right? Otherwise, you have to really outrun the network growth in order to reduce your cost of Bitcoin production. And now we're getting to halving. So I think on a broader level, it's just like making everybody's life harder than before, and it will be even harder in the next like 1-2 quarters. So like most of the mining companies had like a single to double digit growth in terms of cost of Bitcoin production. I mean, that doesn't even include the corporate overhead and the interest expenses, just the cost of revenue. Only a handful of them managed to decrease that.
Yeah, I think Argo was one of the few that actually had a pretty big decrease in cost of production.
Yeah,
Did you dig into that one?
Yeah, Argo, Galaxy, and Riot. They all got a lot of power curtailment credits over the summer, and that helped a lot. So Galaxy and I think Riot report like negative cost of Bitcoin production on the book. So it's like the credits was way more than enough to offset their energy bills for the cost for the Bitcoin mining segment. So I had a question like that. Does that mean that they maybe curtail too much? Like obvious. I don't know how much of the credit can be rolled over to the next quarter. So if you can reuse it, then consider those credits unused. Doesn't that mean like you curtail too much?
I think that's a good Eric question. Eric, are you able to roll credits like that, or how does that all function?
I think you're outside of the area I focus on. So unfortunately, Wolfie, I'm no help on rolling credits forward, but curious to dive into that a little bit more, maybe on the next episode.
Yeah. But that's basically I think the highest level. And plus some of the like interesting news happening these days are the Core Scientific getting out of their bankruptcy, and also Celsius Network, they're gonna pivot to just Bitcoin mining. So that was funny because like they just got their Chapter 11 bankruptcy reorg plan approved earlier this month, and I think the plan was like they will distribute some of the liquid assets to the customers, and then the illiquid asset will be managed by Fahrenheit LLC, and that will include Bitcoin mining and also some other services. I think it was including staking, because there were some Celsius loan portfolio asset, but then that ran into some issues with the SEC, and now they're just kind of planning to change the scope of the new entity, which will only be focusing on Bitcoin mining. So that means relatively smaller fees paid to the new entity, and the managing company just like reduced fee for managing that. So yeah, I think that's basically how the market recovery has been helping a lot of these companies that have been struggling. Core Scientific, I think, is aiming to like come out of the bankruptcy like early January, like first 2 weeks of January. So they're beating the time to get out of the bankruptcy and start to deploy like more miners before the halving happens.
And Wolfie, did you see? Actually, this might have been your own article that I stumbled into like a day or two ago. But that Core is actually planning to issue more shares to raise money, kind of even amidst the exit from Chapter 11.
I think that's part of the plan, like $55 million equity raise, and also they will. I think they will also issue some new convertible notes to the existing holders of the secure convertible note claims, because they had a bunch of they issued 2 tranches of convertible notes in 2021, and the new issuance will be covering some of that. So yeah, they're gonna raise a little bit more equity.
Gotcha. It's interesting.
Yeah.
I
think in general, over October, another trend I observed, I kind of alluded to that previously, is the kind of first the public miners, they sold more Bitcoin they mined in October. I think that was like a little bit more than 110% of what they mined October. So basically reducing some of their reserves, just capturing some of the market, rally throughout October. So maybe that will continue this month, because they obviously, a lot of them have learned from, the mistakes they made in 2021 by just, blindly hodling every Bitcoin. Yeah.
I laugh because I always I laughed when I saw that was the strategy of just blindly hodling everything. Do you think, Wolfie, we'll see maybe a little bit more of that happening as the price continues to kind of run up here?
I think maybe, but I do think after the 2022 cycle, a lot of them have become more cautious about this strategy. They're relatively, not so crazy about borrowing leverage, taking out loans to buy miners or holding their Bitcoin reserves. So a lot of them will use a combined of strategy, right? It's gonna be selling some Bitcoin, holding some Bitcoin, and then you print some debt, print some equities, and you raise some debt. It's like you have to. I think they have been being more rational than 2021. So maybe we will see less of the holding into the next bull.
And now a quick word from our sponsor. This show is powered by Giga Energy. Giga Energy is a vertically integrated Bitcoin mining company that manufactures all of the electrical infrastructure needed to start mining Bitcoin. Whether that's medium voltage switchgear, PDUs, or power cables for your miners, the team at Giga Energy has you covered. Reach out to their sales team today for all of your electrical infrastructure needs at sales@gigaenergy.com. Use the word hashrate for the subject of the email, and you'll get 5% off your order. All right, now back to the show.
I think so. I think that there's a couple companies that'll be reluctant to admit it until you start to see it happen on their balance sheet. But I don't know. I overheard Patrick Fleury, the chief financial officer at TeraWulf. He basically said, I'm gonna call it what it is and kind of call out the industry for their hodling method. And he basically said no other traditional commodity company or mining company has that type of a strategy, and that it's kind of a silly strategy. So yeah, I don't know. It'll be interesting to see kind of what happens on this next bull run as we kind of take off.
Well, if you think Bitcoin's going to the moon and you have capital to deploy, why would you build infrastructure? Why not just use all your money to buy Bitcoin? If you think if the price is going to skyrocket, exactly, aren't you going to get a much more massive return just buying Bitcoin as opposed to building infrastructure?
Yeah.
It's the age old question: do you buy Bitcoin or do you mine Bitcoin? I think we're all firm believers in mining Bitcoin here. So it's well, Eric, you kind of segue into your segment, your chunk here as well. I wanted to also get, a little bit of an update on your end. There's been quite a bit going on in just the traditional energy industry. So would love to hear what you're seeing out there.
Yeah, it's been a pretty active month in terms of projects getting announced or canceled. And I pay attention to the North American markets more than anything else, maybe exclusively the North American markets. And there's a decades long energy transition, right? We're kind of in a continual energy transition. It's just a matter of which phase. Right now it's renewable expansion and transmission project expansion. And there were a couple big blows to the energy transition in the last month. One was the project, the NuScale Small Modular Reactor, or SMR project, that was, for me and a lot of others, giving hope to the rise, of nuclear in this country. And small modular reactors seem to be the gateway to nuclear taking off again and providing some, strong baseload power in the decades ahead. And the project, it was going to be their first commercial scale project. I think it was about a half a gigawatt project. They pulled the plug on it. It was going to be constructed near Idaho Falls. And, that their stock price, adjusted accordingly to that news and hasn't really rebounded yet. So, but their CEO is still making some pretty big claims that, this industry isn't dead. This is just a setback. And I'd like to believe that, because I'd like to see nuclear come back to this country and provide some long-term stability to power supply. But, the question mark around that is a little bigger today than it was a month ago. And offshore wind is seeing, a lot of concerning press. We had 2 big projects off the coast of New Jersey get canceled. A big wind developer took a $4 billion write-off, kind of walking away from those projects. So that was pretty big. I don't know the details, but there's some stuff in Europe going on where my understanding is they were struggling to get subscribers to the project. So there were a couple that got canceled out there. New York, I think, was seeing the rate impact of some of these offshore wind projects and put some, I'll say they imposed some limits on power cost increases that could come from these projects. And that caused people to question whether or not some of the projects that were going to supply power to New York are going to get the plug pulled. So, that doesn't, there are always, there's like 2 steps forward, 1 step back when you're going through an energy transition, but those were some pretty big setbacks. And yeah, look, you got a question, Ben?
Well, I was going to ask on the wind projects, had those even started yet, or was it just the plug got pulled on the funding for them?
I mean, when you've spent $4 billion already, you've likely at least touched some infrastructure at that point. But I mean, energy projects can have an extraordinary front end cost that's largely labor, right? The permitting activity, the engineering activity, right? There's a tremendous amount of cost. And I don't see those offshore wind projects as anything less than an extraordinary engineering and construction effort. So I don't know the details on how much of that money was in labor versus material, but my suspicion is there was at least some material involved in that they had to walk away from, but I'd have to look that up. So on the flip side, Texas approved in Proposition 7, the Texas Energy Fund, which included, and I'm not an expert on the topic, but I understand it was around $7 billion in low interest loans that would fund resiliency projects, aka natural gas projects. And there's some debate on whether that's going to go into new projects or if that's going to be, repurposing or refurbishing of existing gas projects. But it sent a pretty strong signal that there's a resiliency issue that needs some dispatchable resources to address. And you can imagine, the renewable industry is not thrilled about continued operation of fossil resources. And there's a debate to be had. I try not to take sides, but just recognize that, the the debate hasn't been settled on whether fossil resources are needed or not needed to maintain grid stability. But the reality is, for the Bitcoin ecosystem, that volatility, that comes along with resiliency has produced some pretty meaningful revenues to loads that can respond to volatility. And, talking to energy companies and entities that have capital to put to work in this space, the question mark around what's volatility going to be like, in the coming years, is it going to be similar to prior years? And how does that get priced into your energy products? And are we, seeing that as an opportunity, or are we seeing that as a risk? And it depends on, do you have a fixed power price product where you can, resell that power when you curtail and capture the upside, or are you riding the market? And that volatility is a question mark about how much interruptibility I need to bake into my economics. So, when you see, I'd say unexpected changes in the pace at which the energy transition is going to occur, and the dependence on some traditional dispatchable resources to get you through some of the challenging, high demand periods, it makes it, I guess, exciting, but also a little bit more difficult to, build that confidence and certainty into your investments. So, things are going to be moving forward, on the long time scale, right? This is just kind of part of managing, energy supply long term. But some of these short term headlines, create a little bit of a knee jerk reaction with investors who are trying to understand, are my 30% returns going to shrink to 3%, or are they going to grow to 60%? Right? There's a big impact, when the diversity of your energy supply is in question.
Yeah, it's I'd be curious to bring you all the way back to the NuScale. I think just to maybe touch on that just a little bit longer. I thought that I read part of why that one fell through was they tried to get enough co-ops and municipals to take that power. Is that, and then they didn't have enough of that happen, and then the power rate jumped rather substantially, and then it kind of unraveled from there. Is that what happened?
Yeah, early in the year, or maybe it was last year, but it's older news that there was a large increase in the project cost. Call it round numbers. It was going to be $5 billion and it increased to 10. Right? I don't think it was that. I don't think it was a double, but it was a large increase.
Yeah.
And part of that is this project's been going on for a while, and inflation has had a large impact. The cost of building things has gone up appreciably. So is it necessarily, specific to that project, or is it just reflective of the industry, and building things has become increasingly expensive over the last 2.5 years? But the last cost update they said was, kind of in line with inflation. Inflation adjusted, the cost hasn't changed. But your question about the subscription levels, my understanding is they had an arbitrary, or maybe it was like a black and white line, but I feel like it was more of an arbitrary, we need about 80% of the offtake subscribed to in order for this project to advance through the next stage. And part of their announcement was we didn't have enough subscription. We didn't meet our threshold. Now, were they at 79%? Probably not. Was it 50? Maybe those details are out there in the ether, but I don't have them in front of me. But obviously they didn't have confidence they were going to get enough offtake. Buyers, it's hard to find buyers for $100 megawatt hour power when there are alternatives available in the 40 to 60 range.
Oh wow, yeah, I mean, you think a Bitcoin mining company would be pretty interested to step in. That's kind of immediately where my head goes. But I don't know. Do you think that that's just not even on NuScale's radar for a small modular reactor off-taker?
I think, when DPO is talking to renewable asset owners that are relying on federal tax credits, right? For wind, it's production tax credits, solar, PTCs and ITCs have a certain type of low cost of capital that come to the table to secure that portion of the project, or essentially finance the portion of the project that is, I'm doing air quotes, guaranteed by the federal tax credits. And those investors need very low risk in their projects. So, Bitcoin miners don't represent a 30-year offtake counterparty to guarantee, the power is going to be delivered in such a way that the production tax credits are going to be generated. So that's a long answer to say, I don't think Bitcoin projects in general are going to solve the issues that are presented by, projects not having enough offtake, because it's not just having the offtake, it's having a counterparty that can guarantee that revenue stream for an extended period of time. And my guess is those nuclear facilities were probably looking for at least a 30-year commitment, is my guess.
Oh, wow.
Certainly nothing shorter than 20.
That almost has to be like a
5-6 halving cycles.
Yeah, sorry, Wolfie, go ahead.
No, I was just saying that's 5-6 halving cycles.
Yes, it is. It's a hard thing for a Bitcoin mining company to kind of, well, maybe not commit to, but yeah, I mean, Wolfie, I think what you're getting at is like the compression on revenue that far out gets really tough to model out their business, right?
Yeah. I mean, you don't even see like a lot of the mining companies will lease the land for like 30 years. I don't recall seeing that much kind of lease. Maybe 10, 20 years. Yeah. That's a pretty big commitment.
Yeah, it's a huge commitment. Eric, is that, I don't know, maybe is that like unusual for a project like this, or because they almost have to target like a township, right? Like, hey, you're a township, you guys are going to be here for 30 years, right? Or are there, I don't.
Well, it could be, yeah, I think like the UAMPS was a counterparty working with them, and I forget what that stands for. Utah Associated Municipal Power Systems was working with them on that project. And I believe the intent was to find subscribers in, that municipal power space. I don't know if it was for all of the project or, if they wanted a small percentage to be delivered to municipalities. But, a municipality or a co-op or a regulated electric utility or a large, corporate entity like, the Googles and the Facebooks of the world that use a lot of power, right? They represent a balance sheet that can stand behind a long-term power supply agreement.
Got it.
And, or maybe it's not a balance sheet, but it's, if you're a government entity, the likelihood of you paying your bills is much better than, somebody who, doesn't have, institutional grade investment rating. And, you have to weigh that when you're deploying capital into a project and you're only expecting, high single digit returns, there has to be near zero risk. And, there's a handful of energy consumers that fit that profile.
That's interesting. But how would I'm just trying to get my head around, like the TeraWulf does have, like they kind of turn a nuclear site into a Bitcoin mining facility by just using that power to mine Bitcoin. Is that a more doable like approach instead of investing in new nuclear sites?
Absolutely. And that's kind of core to DPO's strategy of aligning Bitcoin mining infrastructure with energy headaches, right? If you have an existing nuclear facility that has a license to operate for a certain period of time, but it's congested, it's at a congested transmission node. And, this facility is going to operate for the next 10 years or 5 years. And that's kind of a given. But, 60, 70% of the hours, it's getting terrible energy prices in the market. Right now, you're not covering the cost, the incremental cost of the capital investment and the operating cost, but rather you're addressing an energy headache that is created by this nuclear facility not being dispatchable and injecting into a congested node, and you're putting some load there to soak up the power that's already being produced. And the net for the system is a very different threshold than building a new facility. Same thing with wind. When DPO works with energy companies to drop these facilities behind the meter at wind sites, the power agreement doesn't cover 100% of the capital and operating costs for that facility, but rather says we're going to give you an incrementally better value proposition than what you have on the table today. Your ability to deliver this power to a higher value market, it only comes two ways. One is you build a transmission line to that new market, which no project can support that kind of investment on its own, or you put a load behind the meter that can soak up that power at a more lucrative payday at the end of the day. And in some cases, if you structure those energy contracts to have little to no risk for the energy asset owner, it's kind of a no-brainer. It's a win-win. It's like, well, if I do this and I deliver this power to this load on site, I'm going to be better off than I am today. And I don't have to worry about the balance sheet of this counterparty, because if they don't perform, I'm just back to where I started.
Yeah. I think, Wolfie, you're asking a good question, which is like, I think, Bitcoin mining would be better suited to target existing infrastructure that may not have a good power price. And so they, Bitcoin mining can come in as like a backstop to guarantee 3 cent, 4 cent power versus, them going negative on their power.
Makes sense.
Yeah, we're talking to one renewable energy company with a wind project, and in I'll say one of the southern states, to try and remain sensitive to
yep.
Energy companies not wanting to talk about their activity in the Bitcoin mining exploration, and for the last couple of months, their average net revenue from this wind project has been zero.
Oh, zero.
Now, granted, they're still producing the production tax credits, but on the delivery of power merchant into SPP, the average LMP they've captured over the last couple of months has been zero.
That's brutal.
So, I mean, you if you can capture a floor of $10, right, you're infinitely better than zero. So, putting these projects behind the meter, in regulated markets, it's more difficult. It's not, Texas is great because you can just kind of slide in behind the meter. You bring a renewable energy provider to the table, and you slide a couple dollars a megawatt hour in for them, and you're off to the races, and you're delivering power behind the meter. You go outside of these deregulated markets, and it's a little harder to bring that retail energy provider to the table, because the guys that are producing the power need to remain wholesale providers and not participate in the retail transaction. And that's doable, but it's harder when you're in a regulated market.
Eric, I have kind of as I'm hearing you say all of this and the different opportunities that might lay around out there at these renewable, wind generators. I know solar similarly has, some congestion problems also in certain pockets. Is there like a Zillow.com for energy pockets? Like, is there like a fun app or a marketplace where like a wind generator can go drop, hey, I've got 10 megawatts of load that I'd be happy to take an off taker. Is there anything like that out there?
DPO has talked to so many energy companies over the last 2 years. That's a good idea. Maybe we should create the Zillow app because there's, I tell you what, the type of energy contract in place with these energy assets is as important as the LMPs that they're capturing, right? Because some projects have relatively little, if not any, flexibility on what they can do with the power. It might be all wrapped up in a PPA that they really can't get out of, or they don't want to open up. If you're building, say, 20 megawatts of Bitcoin mining behind a 200 megawatt wind asset, are you really going to open up a 200 megawatt PPA to the risk of renegotiation to get value out of the first 20 megawatts? And in some cases, that's a really good idea because the upside is so high for those 20 megawatts of Bitcoin mining. But again, you enter that space of, well, there are tax equity investors that are tied up in that PPA, right? And do we really want to upset that apple cart, and subject the whole project to concerns about, Bitcoin mining being part of the counterparty? So my point is, it's probably easy to come up with a map of LMPs, and say, well, this region has pretty suppressed pricing. I think that's, for the most part, publicly available if you spend the time to put it together, or subscribe to services, right? There are LMP contour maps that are out there, but the harder part is which of those projects are actually open for business and under what contractual circumstances.
Food for thought. Yeah, no, I appreciate that. Like I said, I was just kind of kicking that around as I was hearing you talk about what potential availabilities are out there. Well, guys, I really appreciate the updates here, and just to keep a tab on time, Wolfie, I know it's we're getting deep into the night for you, and the other three of us, it's still pretty bright and early working through coffee. Did you guys have anything else you wanted to maybe kick around before we sign off here?
I think we covered the spectrum today, Ben.
I think we did. There was quite a bit to cover too. It's everything from Aradyne and just the sheer volume going through Collin and the Luxor trading desk, and Wolfie with the bankruptcy updates, and what we're seeing on the cost of production, especially as we kind of end the year here. And Eric, I think you and I could probably geek out over power for a whole nother hour after this, but yeah, I don't know, guys.
I think so. And I don't know if you hear this Siberian Husky trying to join the conversation with me right behind me, but he's had a lot to say too.
Yeah, we'll see. He may actually make it into the episode. We'll see what editing tricks we can do, but he's been contributing nicely as well. Well, awesome, guys. I, as always, appreciate your time. I think we just dropped a bunch on the audience for them to kind of chew on and think about. And, if you guys want to go around and give a quick handoff, want to make sure that, people can always get in touch with you guys outside of the show as well. So Collin, if you want to kind of go around the horn again, and how can people get in touch with you and Luxor?
Sure. Yeah. So again, Collin Kelly with Luxor at the ASIC trading desk. I'm always on LinkedIn. That's probably the best way to reach me. Feel free to shoot me a DM. I'm happy to jump on the phone or answer any questions anybody has. So yeah, LinkedIn is probably the best way to get a hold of me.
Yeah, same here. For DPO more broadly, I'd say info at Digital Power Optimization is a general inbox you can throw some questions and curiosity toward. If you're looking to connect with me specifically, hit me up on LinkedIn and I'll try and be responsive.
Yeah, me too. Except that we have been writing a lot of news these days on the Miner Mac. So if you guys have any tips, scoops, just send our way. Just news at theminermac.com.
Awesome. Guys, thank you so much again. Until next time, we'll talk to you guys later.
Thanks, Ben.
Cheers.
Thanks, y'all.
Thanks, Ben.